If we jump into the vol side of things, we've got obviously realized vol's been ticking down a bit as we found a bit of stability. But we still had some large swings. Sunday we tried to break higher. Monday we pulled back pretty violently. So the 10-day realized didn't collapse, but it's just ticking down a little bit to around that kind of 40 or 43 level on Bitcoin. It did get to highs of 61 though, so that's come off nearly 20 points. ETH realized though has held up better. That's at 57. Implied vols had another spike on the attempt to break higher on Sunday, and yet they did kind of stay there. They haven't really drifted all the way back. They haven't stayed at the highs, but they still remain elevated, and this is why you get carry numbers that are positive here. So you can see here that Bitcoin carries at around 12 vols over its realized here, and you've got about half that, about 6 vols of carry on Ethereum. Now, FOMC and non-farms this week are the major macro catalysts. So that's probably the reason why front end implies are staying elevated. And as usual, once those events are out the way, we would expect some sort of vol reset, provided that the spot doesn't go haywire. But we think we're in this kind of middle-ish level where we've got 22K support and 25K resistance. So I don't think we're going to move a million miles from here, which probably means vol's headed lower into the weekend would be my best guess. Okay, moving on to term structures, we can see remaining inverted. So on the week they have shifted slightly lower, but the front end weeklies are kind of holding best. So you see here that's barely moved down, but the rest of the curve has shifted. Same thing with ETH, rest of the curve shifted. So a lot higher obviously than they were a month ago, but compared to last week, the absolute front weeklies have kind of held their bid. The rest of the curve's kind of starting to shift down. Looking at the spread between ETH and Bitcoin, it has moved up pretty much in parallel. So it got down pretty low in the front at around 3. Now it's back to around 5, 6. In the back, it's back to around 10. So we had been saying, keep an eye on that spread. If it gets kind of at 5, you probably want to close your eyes and buy it in the back end of the curve. It didn't really get down to 5, so I didn't manage to get any on. But it's one of those things, just to keep on the radar throughout the year, as and when 3 to 6 month volatility spread gets below 5, it's probably going to be a close your eyes and buy it type situation, right? Because generally ETH's realized will always come back with a vengeance. And we can see that here, 14 realized on the 10-day as the spread, and 10 realized ETH over Bitcoin on the 30-day. Okay, and then, as I said, I do anticipate curves will come under pressure into the weekend. So long calendars, again, may be a decent way to play that. But, we have seen some volatility over the past few weekends, which might make traders wary to sell it too soon. So whilst normally you would think post events like FOMC and non-farms, front end's going to get smashed because we're heading into a weekend where weekends used to be quiet because nothing was going on in crypto. Well, the last 2 weekends, we've had big rips to the upside where vols actually caught a bid. So people might be wary of weekends for a couple of weekends until they prove to be quiet. And then that dynamic comes back where they sell the vol into the weekend, right? So just keep an eye out for that. But if anything, it might be if you believe that it's not going to rip at the weekend, it might be a good opportunity to get some of that front end short on, so you can earn some carry over the weekend. All right, looking at SKEW. SKEW started to reverse back towards put premium after spending the last few weeks in call premium, especially in Ethereum. So you can see that here. Ethereum's the yellow one. So that's convincingly reversed back into puts here and here, both in the 1 month and 3 month. BTC 1 week SKEW, slightly for puts, 162. So 1.62 vols puts are trading over calls, but the rest of the curve is still skewed towards calls on Bitcoin. So it hasn't quite pulled the whole curve up. Ethereum SKEW obviously is deeper input territory. The 1 month, or the 1 week, 369. And it's only holding for calls much further out in the curve. So in the 6 month bucket, you see a very, very small premium for calls. It's still there, but ETH SKEW in the front end was very quick to reverse because it hasn't really managed to get going on the upside. So people aren't as excited about buying calls in the short dates. The sharp reversal in spot yesterday did induce some short dated put demand, and it does seem like traders do expect more upside in the next few months, whereas which is why midterm expiries are holding a bid. But over the next week or two, they might see some downside risk given the run that we've had recently. Okay, and that's what SKEW's kind of telling us. Okay, if we now move on to, obviously, as always, look at the dashboards in your own time. Just kind of puts everything in one place for each asset. Not really a lot to call out there. We already mentioned what's going on in term structure, SKEW and realize, but just peruse that in your own time. In terms of option flows, another week where flows have been dominated by calls, but for a change, we did see some material put demand come in because that sell-off was like a 5% pullback from the high in short order, so people got a little bit spooked, right? So the dominant, the big clips that I saw in Bitcoin are basically call buying in the 24K to 28K area. So that's this stuff here. And that was centered in the purple, which is the 3rd of February, and the light blue, which is the 24th of February. It's a pretty short dated call demand still. That's been the pattern for the last few weeks, and nothing really different there. We did see a load of straddle selling in the 23K strike. That was for the same expiries, 3rd of February and 24th of February, as people tried to earn some theta as markets were stable before the weekend. And then when we sold off just yesterday, we have obviously had a rush of put demand come in. The strikes are the 21.5 to 22,500 area. And again, people focusing on front end on this purple, which is the 3rd of February expiry, which is for the end of this week, basically. All right, so people don't really want to pay up for downside puts any longer than they have to. They're just going to use them to play a quick correction and then get out of them, right? That seems to be. And we also did see a big clip of put spreads go up. So it wasn't just outright puts that they were buying. There was a lot of on-screen outright put demand, but in terms of the block trades that went up, there was a big put spread, 22.5, 21.5 that was traded. Okay, moving on to the Ethereum flows. So two-way flows in Ethereum. Volumes were a bit lighter than Bitcoin, and just generally volumes are lighter because the breakout to the upside kind of isn't happening right now. The largest clips in Ethereum were the 1,500 puts, 3rd of February getting bought. It's a similar type of thing to what we're seeing on Bitcoin. Selling of 1,700 calls, so effectively a bit of a risk reversal there in the 3rd of February expiry, where people are happy to sell the 1,700s because the break to the upside just doesn't look like it's coming, even when Bitcoin was trading well. And they're using those 1,700s to get protection on at 1,500 strike. Some did it as risky. Some of it was just independent flows. We think there's been some overwriting as well going on. So I think part of the 1,700 call selling is coming from overwriting as well. And then in terms of call demand out of Ethereum, it's a bit more long dated, as we mentioned. So there's some April 1,900 calls that got bought and a big clip of September 3,000 calls that got bought. Which, that's probably a more material clip in terms of size, looking around 20,000 options there. Okay, now gamma positioning, dealer positioning, what does that look like? So some two-way flows returned, helping dealer positions get squared up, right? So if we look at the BTC dealer positions, they were running pretty short last week. That was exacerbating some of the choppiness, but because we've got all those straddles getting sold in February, that gives the dealers back a load of gamma. So that's why we see the short gamma on this thing has flipped back towards flat. So this blue line here was in negative and it's jumped back towards flat. And that's because there's been a decent amount of selling that's absorbed by the dealers, taking them more neutral. Now, if we look at the positioning per strike, we can see that dealers are certainly long the 3rd of February around this 2,300 area, where the straddles were sold. But if we were to rally 2,400 and above, the dealers become short. So it does look like the upside is where you're going to get much more squeezy price action. The downside, you're going to get more drifty price action. So I wouldn't expect realize to really explode to the downside, given the positioning setup in Bitcoin. Obviously, if there's a really material sell-off in the macro, then you might get that. But in general, I would say the setup is for sharp moves to the upside and not a lot to the downside in terms of Bitcoin. If we then look at Ethereum positioning, that flipped from positive to negative. So the reverse of what we see in Bitcoin. So that's showing us that there has been some demand for options come back in. We know that dealers are now short 3rd of February in the 1,500 to 1,650 area. So that's flipped these guys more short than they were. They were quite long. Now they're small shorts. They're not massively short. So I don't anticipate loads of realize. But what I do think is certainly to the downside, whereas ETH just couldn't really get going past 1650. On the downside, if we break below 1,500, there's nothing really stopping ETH from moving, right? So I would expect the realized of ETH to outperform the realized of Bitcoin on the way down because of the positioning setup, right? They pretty much got the reverse setup where dealers are short downside on ETH, dealers are short upside on Bitcoin, right? So that's quite important to understand and will help kind of guide you in terms of where to expect the realize to happen, contingent on what direction we take. Okay, so that's what I'm seeing in the positioning setup. Okay, that's a short one. let's call that a wrap. That's your Crypto Weekly. I'll catch you guys.